I'm Motley Fool Canada senior analyst Nick Seipel, and this is the 5-Minute Major, here to make you a smarter investor in about 5 minutes. Today, we're discussing Shopify's fourth quarter and full year 2023 earnings. My guest today is Motley Fool Canada Chief Investment Officer Iain Butler. Iain, thanks for joining me.
Fun to be here, Nick. Let's hit Shopify.
Yeah, let's get after it. Always fun to tackle Shopify's earnings. Let's start with the numbers. Fourth quarter numbers look pretty strong. Revenue up 30% year over year. That's when you exclude the divestment of the logistics business they did last year. This is the company's largest revenue quarter in history. Gross profit up 33%, the first quarter ever where the company has delivered more than $1 billion in gross profit. Free cash flow margin came in at 21%. And looking a little bit deeper into the business, Shop Pay still is performing well, processed $45 billion in gross merchandise value in the quarter. That's up 32% year over year. It's now being used on 60% of transactions on the platform. Offline, Shopify is traditionally an e-commerce focused business. Offline is growing nicely as well, up 28% year over year. You look at all those numbers, not a lot to complain about. However, stock closed down over 10% in the day following that earnings release. Iain, what's the beef?
I'm actually going to, before we get into the stock's performance, I'm actually going to quickly dial it back a day or two before, or actually closer to the end of January. Shopify announced that they were upping their prices across much of their product suite. And frankly, that was the biggest item in my mind for the business long term, because it just goes to show what a strong competitive position Shopify has established amongst its customer base. And I think that's going to be really, really important and to watch play through over the years. However, in the moment, we had all these good numbers thrown our way, and then all of a sudden the stock opened way down. Now, it was on a day where the whole market was way down, seemingly on the back of, call it realizations or pontifications that the Fed may or may not cut rates as much as once expected by the masses, maybe 4 cuts instead of 6 or something like that. So that was probably part of the tough day that Shopify had. However, if we were to nitpick, I suppose, perhaps first quarter guidance came in light. They're guiding for 20% revenue growth, maybe 25% if you sort of back out some of their divested logistics businesses. Gross margins, though, expected to expand. Guidance is calling for a low teens increase in operating expenses. I don't know, growing business. I think you kind of expect operating expenses to keep going higher. That's kind of what the game is at this stage of the life cycle for Shopify. Forecast implies adjusted operating income of 178 million. Now that did come in well below consensus, but as I always like to say, maybe consensus was wrong. They guessed wrong, and that's just the way it goes. But I think it's really important too that Shopify is becoming a free cash flow generative company, and again, that free cash flow margin is expected to continue as it did in the most recently reported results. So I don't get too worked up about what happened to the stock yesterday. I also don't get too worked up about a quarter's guidance or even a year's guidance for this company, or really any company. I like to think long term about this in every company, and I think in the context of our experience with Shopify, we recommended this stock actually way back in March 2016 for our Stock Advisor Canada members. It's up to the tune of about 3,000% since that recommendation, and we've sort of juggled similar statistics all the way along. It's always been high on sort of traditional valuation metrics, trading when we first recommended it around 10 times revenues or so. That figure we re-recommended it actually in February 2019 at 20 times revenues. It went as high as 70 times revenues at its peak back in February 2021, which is proven to be a lot. The stock is not back to where it was in February, back at those lofty multiples. However, it's in the context with where it's been historically. Shopify trades at about 14 times trailing revenues right now. And again, it's a more profitable business than it's ever been. It's not growing at the same rate, but in terms of magnitude, it's continuing to clip along with all the opportunity in the world. So from a stock perspective, I don't get too worked about yesterday's reaction. I just continue to look long term, and the business should continue to drive great returns for shareholders.
Yeah, it's a growth business continuing to invest in growth. That's what you're looking for in a company like Shopify. With that, we're out of time for this edition of the 5-Minute Major. We'll see you next time.